Hey, it's Darius Clark from CPAExamTutoring.com, home of the I-75 CPA review course. And we have an 84% pass rate through June 30th of 2019. Why is our passing rate so much higher than everybody else's? I'm going to let some very important people tell you. Nothing speaks louder to somebody's success than what other people write about them. Sure, I can tell you all about the hundreds and maybe thousands of candidates I've held pass in the last few years, but I don't have to tell you because this says it all. You can also read these on my LinkedIn profile as long as we're first connections on LinkedIn. Who are these students? Very much like yourself. They came to me after trying Becker and Wiley and Roger and Ninja, and it wasn't enough. So they said, hey, Darius, I need you to do for me what you've done for so many others. And so what did I do for them? Maybe I tutored them one-on-one, or maybe I hooked them up with my I-75 CPA review course, the self-study course. And then once they learned what they needed to know to pass the CPA exam, they were happy to come back and leave this nice recommendations and tell you that all it took for them was to get on the right road. Look at some of the dates of these recommendations. Nobody has a list that looks like this. Not Becker, not Wiley, not Ninja, nobody. And if you didn't pass audit, it's probably because you didn't know the difference between inherent risk and control risk. That's a biggie on the audit exam. Which one's the risk of material misstatement before considering the company's internal controls? The fact that misstatements are simply going to be in the financials regardless of controls. That's inherent risk, right? Sure, and an example of that would be the company engaging in risky investments like derivatives and things like that. That would be high inherent risk for the audit. So you got to know the difference between inherent risk and control risk to pass audit. And maybe you didn't know, and that's okay. Now you're going to learn it, right? Inherent risk is before consideration of the controls. What's the risk of material misstatement? And that risk would increase for things like derivative securities, right? The company invests in derivatives. Other reasons why inherent risk would be assessed higher by the auditor would be if there's a lot of turnover or if there's a lot of related party transactions. These would all be reasons to assess inherent risk higher. What about control risk? Well, control risk is the risk of material misstatement after considering the company's internal controls. So after looking at internal controls, maybe in the revenue cycle, the auditor determines that the credit manager reports to the VP of sales and determines that that's high risk. That would be control risk because there is a control in place and the auditor assessed the fact that that control is not going to reduce any misstatement. In fact, it's going to contribute to misstatements. Why? Because the credit manager, whose job it is to be objective before extending credit to customers, if the credit manager reports to the VP of sales within the company, well, the VP of sales is only interested in getting the sales figures up because that's when he gets a commission and all his salespeople love him. So the VP of sales would be the wrong boss for the credit manager, and the auditor would assess that as high risk. And that would be control risk issue, not an inherent risk issue, because you can correct this by simply changing the supervisor of the credit manager from the VP of sales to who? Somebody like the treasurer would be a good boss for the credit manager because the treasurer is not associated with the revenue cycle. The treasurer is associated with paying bills. That would be the expenditure cycle, right? Signing the check would be the treasurer's job. And that doesn't happen when sales are being approved or sales are being made. So the treasurer is really outside the revenue cycle, which would make for a good boss for the credit manager. And that would be a way to correct an internal control weakness. Now, this is just a quick little synopsis of something that we would go into in the I-75 course, and you'd feel very good about the difference between inherent risk and control risk. But for these couple of minutes, I want you to understand that if you didn't pass audit, it's probably because you didn't know the difference between these two. And there's more, because if you didn't pass audit, you didn't know the difference between sampling for attributes and sampling for variables. Well, maybe you don't understand sampling at all. But if you do, You got to understand that sampling for attributes, you're testing controls, and you're trying to determine if the control is reliable. Sampling for variables, you're not testing controls. Here you're trying to estimate an account balance and trying to determine if the account balance is fairly stated. Bottom line, if you didn't pass audit, there's a lot of things you didn't know the difference between. And here's another one, review versus compilation. Right? What's the difference between a review and a compilation? Well, they both follow the SARS standards, right? But the review, you've got to be independent. In a compilation, you don't have to be independent. In a review, there's going to be a management rep letter at the end. In a compilation, not going to be any management rep letter. Why? Because you don't make inquiries in a compilation where you're asking for responses, so you don't need a management rep letter at the end of a compilation. But in a review, you make those inquiries, you expect responses, and you document those responses and present them back to management at the end so that they can sign it. So you would need a management rep letter for a review, but not for a compilation. I can't emphasize enough, if you didn't pass audit, you probably didn't know the difference. The difference between audit report for an issuer and the audit report for a non-issuer. Very different looking reports. The audit report for an issuer has the opinion in the first section of the report. Right, here's the first section, the lead-off paragraph of the report. In our opinion, the financial statements present fairly in all material respects. That's in the very first section of the report for an issuer. The report for a non-issuer looks like this. You have the introductory paragraph, followed by the management responsibility paragraph, and there's no opinion in either of those paragraphs. So we go down to the auditor's responsibility paragraph. There's no opinion found there. And then finally, the fourth paragraph, opinion paragraph. There it is. In our opinion, the financial statements referred to above present fairly. So if you didn't pass audit, you didn't know the difference between these two reports, the report for an issuer and the report for the non-issuer. Now there's more, because if you didn't pass audit, you probably didn't know the difference between the substantive approach versus the combined approach to what's called further audit procedures. Right? When the auditor is done with risk assessment and it's time for further audit procedures, you can either choose the substantive approach or the combined approach. Well, the combined approach includes testing controls and substantive tests. The substantive approach includes only substantive testing without testing controls. You didn't pass audit, you probably didn't know the difference between the audit plan and the audit strategy, because they're not exactly the same. The audit strategy is more of a high-level approach to the audit. The audit plan has to do with the specific testing. So if you didn't pass audit, go to cpaexamtutoring.com and get yourself on I-75 and take I-75 to your next pass. While you're on the site, stop by the Ask Darius button and hit me up. Let me know about your CPA exam journey. Tell me what road you've been on.